What's up, everybody? This is Sunko, the Korean bro. Today is 2022, November 1st. And what I'm going to look at first is economic calendar. We had on Tuesday, November 1st, we had JOLT's job openings and ISM manufacturing PMI. We'll look at what these are first. They are the actual number is larger than forecasted number, and we'll see what that implies. First, we have ISM Manufacturing Purchasing Managers Index. So the Institute of Supply Management, Manufacturing, Purchasing, and Management Index report on business is based on data compiled from monthly replies to questions asked for of purchasing and supply executive over 400 industrial companies. Blah blah blah, and a higher than expected reading should be taken as positive bullish for USD. So anyway, higher than expected. So higher than expected reading should be taken as a higher than expected reading should be taken as positive sign. So we have a higher than expected, a higher than expected reading should be positive. So we have a positive point, and also for job openings. A survey done by the U.S. Bureau of Labor Statistics to help measure job vacancies. It collects data from employers about their business employment, job openings, recruitment, hires, separations. Job staff defines job openings as well as all positions that are open on the last business day of the month. A job is open only if it meets all three of the following conditions. Okay, a reading that is stronger than forecast is generally supportive for USD. A reading that is stronger than forecast is generally supportive for USD. So we have a point much higher than expected, so which means it's bullish for USD. And let's go to Malifo. Okay. Intel stock is on the rise despite poor earnings. Why? One more income, investor money in the dividend king. Sophie Technologies earnings report blew everyone's mind. $1 trillion growth stock down 33% to buy right now. Two dividend stock billionaires keep buying. Uber rides higher, but here's Tuesday's big stock winner. Uber rides higher. Okay, Intel stock is on the rise despite poor earnings. Why? Intel missed on earnings and reduced revenue guidance. Its valuation had begun to approach its book value. The company remains a force in the semiconductor industry. Remains a force. Okay. Investors may not have realized how cheap Intel has become. Let's look at Intel first. Something remarkable happened recently with Intel stock. The company released its third quarter earnings report, disappointing investors on earnings and revealing its revenue projections lower. But despite that news, Intel stock actually increased in next day trading. Given those results and the reaction, is it finally time to buy Intel stock? Another weak earnings report. Okay. Immediately, Intel's latest earnings report shows the depth of its issues. The company reported $15.3 billion in revenue for the third quarter of 2022. From a GAAP perspective, they fell 20% from year-ago levels, but slightly beat the consensus estimate of 15.25 billion. GAAP perspective. Okay. However, net income came in at $1 billion, or $0.25 per share. Analysts expected $0.32 per share. Moreover, the $63 billion to $64 billion forecast for 2022 represents a significant reduction from the $65 billion to $68 billion forecast in quarter second. The company cited a pronounced slowdown in demand for both its results and outlook on the quarter third 2022 earnings call. Still, it also said that the beleaguered PC sector began to show improvement in quarter third. Why investors did not care? Okay. The rising stock price could mean that investors may finally gain some perspective on Intel stock. This may seem to make no sense at first glance. Both Taiwan Semiconductor and Samsung continue to hold a year-long technical lead. Additionally, longtime rival AMD continues to climb more of Intel's market share in the server market, according to DigiTimes. Nonetheless, Intel has fallen so far. The sales were less than 1.2 times its book value. At one point, the plunge to its recent intraday low of a $24.59 per share means it briefly traded below this critical level. The state of Intel. At current levels, Intel looks like a buy. Indeed, it is far behind the industry leaders, and it remains unclear if or when Intel will catch up. However, the semiconductor stock trader trades barely above book value. That valuation leaves the stock with little room for a downside. Additionally, Intel's sheer production volume, data center leadership, and emerging foundry business could boost its stock. This means that even if the technical lead remains elusive, a recovery in the stock should not. So the point of this author is that although they has no lead, still they got no room for downside, and that their lead remains elusive. Recovering the stock should not. So, I guess what he strongly suggests is that don't hold it for long term, but then a short term period, you can earn some much money. I think that's what his point is. Let's go to next one. One more income. Investor money in the Dividend King. Federal Reality Investment Trust is the only REIT with the title of Dividend King. Its 55-year track record of consistent dividend increases is likely to continue. Federal Reality has a track record that's hard to beat. Okay. 3 high growth tech stocks with more potential than any cryptocurrency. Roku could dominate the next generation of television. Who's Jeremy Bowman? Etsy has carved out a unique and profitable niche in e-commerce. Okta is rapidly growing into a huge addressable market. Okay. Growth stocks are down this year. These three hold a lot of promise. Cryptocurrency took the market by storm last year, but in 2022, crypto performance has been more than underwhelming. The leader of connected TV, Roku. Okay. Performance this year has been bad enough to make even crypto investors blush. The stock's down 77% this year and has declined steadily throughout 2022. The company is getting hit simultaneously by a macroeconomic slowdown in ad spend, which digital ad giant like Meta platforms and Alphabet just confirmed, and a poorly timed ramp in investments. In the second quarter, Roku's operating expenses jumped at 73%. Uh, Even though revenue only increased 18%, and the company guided to just 3% revenue growth in the third quarter. A large jump in spending on research and development and sales and marketing was the primary reason for that discrepancy. A large jump in spending on research and development and sales and marketing was the primary reason for that discrepancy, and its gap loss of $110.5 million helps explain why the stock has fallen so sharply. However, Roku is still the favorite in connected TV, the ad-based streaming format that's gradually displacing linear TV. The ad-based streaming format. Active accounts continue to grow, reaching 63.1 million in the second quarter. And the company typically claims one-third of ad revenue from streaming partners in its app. Okay. That represents a huge opportunity going forward, especially as streaming leaders like Netflix and Disney prepare to launch their own advertising tiers. The stock will be challenged as long as the macro headwinds in the ad market persist, which could last at least a few quarters, but it's poised to be the dominant television of the next generation. That would make it worth much more than the $87 billion in market cap it's valued at today. I think I have to know this in depth because it says their biggest advantage is connected TV, but it doesn't really. It's hard for me to grasp their strong point by just reading this article. I might have to look at YouTube clip or something. I'm looking at a Glassdoor review also, and here we have a pros and cons listed, and let's look at it one by one. First and foremost, great people. Culture is great, open, paced but good work-life balance, good pay or spur good, interesting job duties, and great compensation. Um, Benefits could be better. Managers and directors often macro, uninspiring leadership, no diversity, lots of freedom in strategy execution, opportunities to work on impactful initiatives, support the leadership team and extremely smart team members. Further double down focus on international market. Double down focus on international market. Okay. Good but not great. Okay. Roku is great if you are self-motivated and good with a culture of team, not family. My coworkers are some of the most talented people I've ever worked with. I've been very happy at Roku, but unfortunately, I've hit a ceiling in my vertical. It's time to move on. Okay. Cons Roku is very no frills. Benefits are limited and they aren't going to wine and dine you. The biggest problem I have with Roku is that they don't deliver on the things they promise. Raises and com reviews were supposed to be objective, but people who have worked at the company for 5 years are asked to manage people who started 6 months ago and are taking higher compensation. I've been at the company several years now and received no pay bump at the time, even though there are new people on my team who are earning more than me and are less experienced. Roku also has a diversity and leadership problem, something they've been working on since the beginning. Okay. Strong culture and leadership at Roku. Compared to the one that I seen before, they have a really high rating, 4.4 out of 5. They would recommend a friend 89%, 88% approval CEO. So I guess overall it's good. Hmm. We'll see Roku. Okay. And what we have next is Etsy. Okay. Like Roku, Etsy has struggled this year due to the overhang in e-commerce. After online shopping boomed in 2020 and 2021, people have taken a break this year, spending instead at brick and mortar stores and on services like travel and restaurants. The stock is down 54% year to date, and the company actually reported a slight decline in gross merchandise sales in its second quarter, showing that spending on the platform fell. However, there are a number of reasons why the company still has a lot of growth ahead of it. Okay. Etsy has carved out a unique niche in e-commerce with a network of 7 million independent sellers making unique artisan products and selling vintage gear like apparel. If you're looking for a unique product on the internet, Etsy is the go-to destination. The brand also fits the era of remote work and millennial culture well, as that generation has expressed a preference for authenticity when shopping. Management has extended its strategy to other e-commerce platforms, acquiring Reverb, a marketplace for musical instruments, Depop, a vintage and used clothing marketplace, and Elo7, a business similar to Etsy based in Brazil. Okay. So they're not only limiting their business to independent seller, uh, but they're extending their business. Hmm. They're extending its strategy to other e-commerce platforms. Hmm. Those marketplaces give the company growth opportunities beyond Etsy.com. So the fact that they can expand their business gives them more growth ahead. Okay. And both the stock and the overall business should recover when the macroeconomic climate improves and actually rose off the difficult comparisons from 2021. The company is highly profitable with adjusted EBITDA margins at 25% to 30% range. And the one that we're going to see is Okta. Okta is best known as a maker of cloud identity software. The company offers the most comprehensive suite in the sector. It helps business allows their employees and customers to log in and stay connected seamlessly and securely. Like other software stocks, Okta shares have fallen sharply this year, down 75%. Its most recent earnings report, the company acknowledged it had faced challenges integrating Auth0, the customer identity software company acquired last May. The customer identity software company, which led to dial back guidance. Because of that and macroeconomic headwinds, the company are stepped back from its fiscal 2026 target of $4 billion in revenue and $800 million in free cash flow. However, the company is taking steps to replace the salespeople lost in the integration and get them trained. They also said there was some confusing among customers and sales force about which product Octa or Auth0 to sell to which customers. The company has solved the problem by using Okta Customer Identity as an add-on for workforce identity. For new customers, it will pitch Auth0. Looking ahead, Okta still has a huge growth opportunity ahead. It's targeting an $80 billion addressable market in identity access management, which compares to its revenue of less than $2 billion year to date. The company has also grown revenue by at least 36% every quarter since it went public in 2017. Hmm. Okay. Now, next one is SoFi Technologies earnings report blew everyone's mind. What happened to SoFi? Okay. A beat across the board and raised guidance are not what most expect in the current market environment. In this video, I will be going over SoFi Technologies. Okay. $1 trillion growth stock down 33% about right now. Alphabet, uh, the long and the shorts of YouTube. Okay. Companies don't have to be decades old to represent once in a generation buying opportunities. In the history bear market, online services marketplace Fever International is a perfect example of this. Fever shareholders have been on quite the ride. In a roughly 31-month stretch between the initial stages of the COVID-19 pandemic and today, Fever's share price catapulted from the low $20 to more than $320 and has round tripped all the way back to $26. Wall Street's avoidance of premium evaluations coupled with the likelihood that higher interest rates will increase the unemployment rate. Freelancers advertising their services on Fiverr's present their scope of work as a package deal. So, unlike other platform where they provide their services on hourly base, uh, they provide their service a package deal. Hmm. Many of the company's competitors lease freelancers jobs on an hourly basis. Freelancers advertising their services on Fiverr present their scope of work as a package deal. Having upfront clarity on pricing has made Fiverr a preferred platform for business. Having upfront a clarity on pricing. So, like other business where they provide their service unclear, they provide their service clearly. Is a key reason spending per buy has continued to rise even as U.S. economy weakens. Mm. Fiverr's take rate is also unmatched among online service marketplace providers. The company's take rate describes what percentage of a deal it gets to keep. Take rate is also unmatched. Okay, a company's take rate describes what percentage of a deal it gets to keep. What percentage of a deal it gets to keep? Okay. In Fiverr's case, the take rate is a nearly 30%. It has been consistently rising throughout the pandemic. For context, Fiverr's biggest competitor, Upwork, reported a 15.4% take rate in the third quarter. Yeah, indeed. Well, ever since COVID happened, people start working remotely. They don't just sit down and work inside the office all day long. They Hybrid and remote work environment has become the norm for a number of sectors and industries. So they bodes well for Fiverr, which has decisively turned the corner to adjusted profitability. With sustained double-digit growth potential and an industry-leading take rate, advanced micro devices, and what else we have? Palo Alto Networks. Has been a solid performer in the stock market over the past 5 years, turning a 200,000 investment into more than 650,000 on the back of its impressive growth. The next 5 years could turn out to be better. Palo Alto, as the company's bottom line growth is anticipated to improve significantly. Palo Alto Networks. Palo Alto Networks. Palo Alto Networks. Okay, this is it for motleyfool.com site. Let's go on to marketbit.com. Okay. Wall Street opens broadly higher. Users Uber soars and forecast. War shares advance, shrugging off Wall Street retreat. Here's why Harley Davidson is roaring higher. Futures. Is the Meta platform stock meltdown a rare buying opportunity? McDonald's stock seizes, but will it hit a new all-time high? It's still not too late to get into energy stocks. Okay, let's start reading this. Okay. Wall Street opens broadly higher. Uber soars and forecast. Stocks are opening wildly higher on Wall Street, turning around after a loss a day earlier. Several companies were rising after reporting solid earnings or outlooks, including drug maker Pfizer and Uber, which soared after issuing a strong forecast for bookings. The S&P 500 was up 0.4% early Tuesday. Long-term treasury yields pulled back a bit more from their multi-year highs. The Federal Reserve is beginning a two-day policy meeting that's expected to result in its sixth interest rate increase of the year as the central bank fights the worst inflation in 4 decades. European and Asian markets were higher. This is a breaking news update. AP's earlier story follows below. Wall Street pointed higher in pre-market trading ahead of this week's policy meeting of the Federal Reserve, with most economists expecting the sixth hike this year for the central bank's main borrowing rate. Okay. War shares advanced, shrugging off Wall Street retreat. Hong Kong jumped more than 5%, and other world markets also advanced after a survey of Chinese manufacturing showed activity has improved. Okay. After a survey of Chinese manufacturing showed activity has improved, um, stock market worldwide has advanced. Okay. U.S. futures and oil prices rose while the euro gained but stayed below $1. The monthly manufacturing gauge from Casten, a Chinese business news magazine, helped to counter renewed concerns about coronavirus outbreaks. Okay. It showed activity declined in October, but at a slower rate than in the previous month. The Hang Seng Index in Hong Kong surged 5.2% after comments circulated on social media saying, without citing any source, that the ruling Communist Party might set up a reopening committee to look at ways to wind down antivirus controls that have disrupted trade and business. Let's go on to the next one. Here's why Harley Davidson is roaring higher. Harley Davidson's hardwire 5-year turnaround strategy from 2020 is starting to bear fruit. Its Livewire Group spin-off became the first all-electric motorcycle company on the NYSE. Since I'm not really interested into bike, I'm just gonna skip this one. I'm just gonna delve into software company, not this one. So, U.S. futures advanced ahead of Fed open policy meeting. Wall Street pointed higher in pre-market trading ahead of this week's policy meeting. So every okay, stubborn inflation, the likes of which hmm. Sashki's gains with Fed policy, more earnings in focus. Uber revenue jumped 72% year over year. Stocks fall. Okay. Powers favor curve poised for inversion as bonds rally. Has a lot of debt. It's not an issue for Tesla yet. Keep on buying these three cheap stocks ahead of earnings. We have an interesting article about Carvana. Recently, I've been really trying to read the materials written about Carvana, and mostly 90% of contents are negative, like 10% are positive. But we have good news with this one. Let's see what that is. I cannot read it unless I subscribe it. But let's look into it. Carvana stock soars 13% in pre-market trading Tuesday. Wow. After JP Morgan upgraded the shares to neutral. Okay. Ending a bearish call on used car retailer. Why? The company is not out of the woods yet as used car fundamentals remains weak. JP Morgan is right. Gupta said in a note Tuesday, but added that risk seems better understood. He has a price target of $20 on the stock, implying a 68% upside to Monday's closing price. Okay. So it's not out of the woods yet. Okay. So this expert sees that more room. There's room for there's room for upward trend. The Federal Reserve is widely expected to raise its benchmark interest rate by 3/4 of a percentage point for the fourth meeting in a row on Wednesday after 2 days of Federal Open Market Committee meetings. And after that, market expects the central bank to come off its hawkish stance to lower inflation and slow down the pace of rate hikes unless data continues to show stubbornly high inflation. Uber stock surged after earnings report showed 72% revenue jump. Wow. Uber announced its quarter third earnings before the opening bell on Tuesday, missing on expectations for gross bookings and reporting greater losses per share than Wall Street had anticipated. However, revenue, rose 72% year over year. Shares were up nearly 13% when the market opened. Here are the most important numbers from the report compared to what analysts were expecting. All the ride share in July in the quarter. Okay. Anyway, revenue of Uber went up. That's the point, okay? Mm. Why stocks rally when everything else is getting worse? Morning brief. If stock prices only went up after you got confirmation of good news, then investing would be pretty easy. That's not quite how it works. In theory, a stock reflects the present value of all the future cash flows a company expected to make. A stock reflects the present value of all the future cash flows a company is expected to make. Present value. That really summarize everything. A stock reflects the present value of all the future cash flows a company is expected to make. And as time goes on and those expectations evolve, the stock will fluctuate more or less. Okay. Stock prices mostly reflect expectations for the future, not so much what's happening now or what's happening in the past. Okay. Not so much what's happening now or what's happening in the past. Reflect expectations for the future. Yes. Okay. Anyway, this is it for today. I'm gonna talk about Carvana in depth next time. Okay. Okay. Bye bye. Have a good night.